Good afternoon, everybody. My name is Joe Werther, and I'm Senior Lecturer in Accounting here at Georgia Southwestern State University. And this afternoon, I want to start with the first of a series of videos relating to the final exam. Let me just tell you what the final exam, what chapters the final exam is going to include. It'll be Chapter 21, Chapter 22, and just a little bit in Chapter 23. Probably direct materials and direct labor variances will be the only thing in Chapter 23. So let's get started and let's talk this afternoon about Chapter 21. Okay, now the first part of this chapter is basically reading the information and looking at anything that is in blue bold print and knowing what those terms are about. I'm going to be asking questions like, what are the advantages of budgeting and the disadvantages of budgeting? What is a budget? Terms like participating budgeting. What else? Let's see. The difference between budgeting and strategic planning and the budget committee, and basically just general questions about budgeting. So I would say from page 1082 over to page 1087, that material, you just need to read that material and have a good idea of what budgeting is all about. Because there will be probably 6 or 7 multiple choice questions just from those pages on the exam. Now, there's a diagram on the bottom of page 1086, okay, and what it is it shows you the master budget, and it shows you all the different budgets that are included in the operating section, such as the sales budget. That's always the first budget that you start with, the production budget, the direct materials budget, direct labor's budget, the manufacturing overhead budget, all the way down to the income statement, okay? Anything to do with operations. So you need to know what budgets are included in the operating section, and then you also need to know what budgets are included in the financial section. Okay, the balance sheet, the cash flow statement, and the capital expenditures budget. Okay, those are the big ones that come to my mind. Excuse me, and probably the cash budget, where you show, your receipts and disbursements of cash. Okay, so whatever budgets are included in whatever area, you need to know the operating area and the financial area, because both of those areas make up the master budget. Now, what budgets on the exam will you be responsible for? First of all, I would say the production budget and the purchase budget. Okay? These budgets are identical, except that purchases is for purchase of merchandise and production is producing something, making goods. And they both have the same formula. And that formula is sales, or cost of goods sold, plus desired ending inventory minus beginning inventory equals production units or units to produce. Okay, That's the equation. Sales is related to the production budget. So when you do a production budget, you always start with the sales figure. Okay? Cost of goods sold is related to the purchase budget. Okay, so anytime you do a purchase budget, you begin with cost of goods sold. Okay, and basically the rest of the formula is the same. Plus desired ending inventory minus beginning inventory equals production in units, and the production budget is always in units, and the purchase budget is always in units. Okay, so we're talking units here now. There will be quite a number of questions on the exam relating to the production budget and the purchase budget, because I feel that this is really important, as an important part of budgeting. In fact, if you look at your multiple choice questions that I've put in GoView, there are a lot of questions where you have to work out how many items are you going to purchase, or how many items are you going to produce. Okay, so you need to know the purchase budget and the production budget. You need also to be familiar with the direct materials budget. Okay, and all the direct materials budget is, and you can look, there's a couple really nice problems in the exercises at the end of chapter 21 that has you calculate the dollar amount of direct materials that you have to spend on to take care of what you're going to produce. So again, with this budget, this direct materials budget, you would start with your production figures in units. You convert those units to pounds or whatever you're buying per production unit. It could be square footage, usually it's pounds, and then you multiply your total pounds by whatever price you're paying per pound, and that's what you're going to have to spend for that month or that quarter, whatever, on direct materials to make those units that you want to produce. Okay, it's pretty straightforward. Budgeting to me is not difficult, it's just busy work. If you do a couple of those exercises at the end of the chapter, you really get on to budgeting, how budgeting works. The multiple choice questions really teach you a lot too. It just takes time. And I tell the students that I've been tutoring that with the multiple choice, you need to do those multiple choice at least 5 times before you're ready to take this upcoming exam. Now, the upcoming exam will be 40 multiple choice questions. They'll be worth 2.5 points apiece. And so it's a really important exam for many of you. I made it a little bit bigger because of the 195-point rule. However, I am going to have a 20-point quiz in Wiley Plus covering chapters 17 and 18, which were covered on the last exam. So here's a chance for you to pick up 20 more points to add to your last exam score, which in turn will be part of the 195 points. So I would expect that quiz will most likely be out there this weekend, the weekend of the 6th of November, and it'll probably be out there for 2 or 3 days in Wiley Plus, so you can complete that and get 20 extra points, hopefully, to add to your second exam score. Now, let me just look at a couple multiple choice questions and explain to you how to go about doing a multiple choice question when it concerns a production budget or a purchase budget. Okay, let's get one of the handouts, and I'm not sure which handout it is, but it's question number 80. The name of the company is called Foss Knight Enterprises. Foss Knight Enterprises. Okay, now this is a typical purchase budget. Now they give you the sales figures, and they want to know what the desired beginning inventory is on June 1st. And they start out by telling you that the gross profit rate is 30%, and the inventory at the end of February was $10,000. Okay? Desired inventory levels at the end of the month are 20% of the next month's cost of goods sold. Okay, so when I see these sales figures, and let's just write them down. Okay, and these are sales. And this is March, April, May, and June. March, April, May, and June. Okay, those are sales figures. Now, if gross profit is 30%, what does cost of goods have to be? Cost of goods has to be 70% of sales, because sales minus gross profit is cost of goods sold. So then, working from the bottom up, you would say cost of goods sold plus, gross margin plus cost of goods sold equals sales. Okay, and so it's telling us gross profit or gross margin is 30%. Okay, so cost of goods sold has to be 70%. So let's multiply each one of these by 70%. Okay, that's the first thing I would do to convert all your sales figures to cost of goods sold. Okay. Okay, 70% times 6,000 should be 4,200. Okay, 70% times 13,000 would be what, 9,100? 70% times 12,000 would be 8,400. And 70% times 14,000 would be 9,800. Okay? So, these are the cost of goods sold figures. Those are the sales figures. Okay, that's the first thing I'd do. Okay, now, we need to read the rest. First of all, we need to read again what they're asking. What is the desired beginning inventory on June 1st? Okay, so this month here, they want to know the beginning inventory. Well, like I tell all my students, the beginning inventory is the same as the ending inventory of the prior month. So if we figure out the ending inventory for May, that carries over, and that's the beginning inventory for June. So why don't we do that? Let's figure out the ending inventory for May. And the reason I want to figure out the ending inventory for May is because if we look here, it says desired inventory levels at the end of the month are 20% of the next month's cost of goods sold. That's the policy, okay? So if I go to May and I want to figure out ending inventory for May, I would say 20% of June's cost of goods sold, okay? 20% of June's cost of goods sold. So let's take 20% times 9,800, which is June's cost of goods sold. And what do we get? 1960? Yeah, 1960. Right, 1,960. Okay? Now, the 1,960 is the ending inventory for May, but it's also the beginning inventory for June. So you just solved the problem. You know, unless they give you beginning inventory in any of these problems, you have to go to the prior month and you have to use the policy in the problem and figure out the ending inventory for that month, because that ending inventory carries over and it becomes the beginning inventory of the next month. So 1960 is the ending inventory for May, and that also is the beginning inventory for June, and that's what they're asking for. What's the beginning inventory for June? Okay, now let's take another one of these questions, and I forgot to mention when I began this lecture that another budget that you're going to see quite a bit on this final exam is the cash budget. Okay? Okay? And what the cash budget is beginning cash balance plus cash receipts minus cash discounts equals ending cash balance. Okay? Now, that's the cash budget. But we break cash receipts down into what we call a cash receipt schedule. And we break cash disbursements, I'm sorry, it's not discounts, it's disbursements, down into a cash disbursement schedule. Okay? Cash disbursements means cash payments. Okay? So if you look at this logically, it's pretty easy really to understand. Beginning cash balance plus what you take in cash from all your sales minus what you pay out in cash for all your purchases gives you your ending cash balance for the period. Okay, that's a cash budget. But inside the cash budget, this cash receipts number comes from a cash receipts schedule, and this cash disbursements number comes from a cash disbursement schedule. Okay, so we're going to look at problem 133, and I'm going to give you an idea how a cash receipt schedule works. Okay, problem 133 in one of the handouts. Distribution Corporation is the name of the problem. Distribution Corporation, okay, collects 40% of a month's sales in the month of the sale, 55% in the month following the sale, and 5% in the second month following the sale. Budgeted sales for the upcoming 4 months are as follows, okay? Let's put the 4 months sales down. April, May, June, July. Okay. These are the sales that they list for the 4 months. Okay, now, they want to know the amount of cash that will be collected in July. Okay, the amount of cash that we're going to collect in July. Okay, so this is the month we're concerned about, what we're collecting. Okay, so let's look at this. 40% of a month's sales in a month of sale. Okay, so for July's sales, we collect 40% of $180,000. Okay, and let's just calculate what that is. I believe it's 72,000, but we'll just check. 72,000. Okay. Okay, so that's what we collect for July sales. Now, what about June sales? Well, it says 55% in the month following the sale. Well, for June, we have $230,000 of sales. We collect 55% of that number in the month following the sale, which is in July. Okay, so in July, we collect 55% of the $230,000. Okay, and let's just figure what that is. Okay, that's $126,500. Okay. All right. Now, what about May's sales? What do we collect 2 months after the sale? Okay. 5% in the second month following the sale. Okay, so for May's sales of $150,000, we collect 5% of that number in July. That's what it says. 5% 2 months following the sale. So 5% of 150,000. Okay, and that should be 7,500. I'll check it. Okay. All right. So those 3 collections that were made in July for July sales, June sales, and May sales, when we add those up, and let's just add those up. Okay, we get $206,000. Okay, and lo and behold, that is your answer. That's an example of a cash receipt schedule. Okay, all we're doing is we're listing the sales and we're saying, okay, what are we collecting? What's our collection policy? And you have to read the collection policy. And it's very simple, really, because I always start with the current month, what we collect in the current month, and then I go backwards. And I say to myself, okay, 1 month back, what are we collecting from 1 month's sales back in the current month? And then I go back 2 months and I say to myself, well, what are we collecting from 2 months back in the current month? Okay, we're interested in what we're collecting in cash, because don't forget, this is a cash receipt schedule. Now, one of the other questions on the exam, okay, might be, what would be the accounts receivable balance July 31st? Okay, well, let's look at July. If we're collecting 40% of July's sales in July, what else is owed to us? Well, for one thing, for July, from July's sales, 60% of July's sales would still be owed to us. So if I'm looking at accounts receivable for July, okay, I would take 60% of 180,000. Okay, and that's 108,000. Okay. Okay, that's what's still owed to us. Okay, for July sales. Now, what about June sales? Okay, we collected 40% of June sales in June, 55% in July. Don't we still have to collect 5% of June sales in August. Okay, so for June sales, we'd also have to multiply 5% times 230,000. Okay, which would be $11,500. Okay, 11,500. So the total sales that would be at the end of July, the total accounts receivable that would be owed to us would be July, part of July's and part of June's sales. And so when we add them up, we would get what? 108 plus 111 would be 119,500. Okay, 119,500 in total sales would be our accounts receivable balance at July 31st. Okay, so you gotta understand, and you gotta read the question. You're either looking for cash collected, or you're looking for the accounts receivable balance, one of the two. And there will be a number of problems on the exam with the cash receipt schedule and the cash payment schedule. Now, I told my class that you have to associate sales with accounts receivable and purchases with accounts payable. Okay, so anytime you want to see an accounts payable balance, it's all about purchases. Anytime you want to see an accounts receivable balance, it's all about sales, credit sales, not cash sales, now credit sales. So pretty much, if you know the production budget, if you know the purchase budget, if you know the cash receipts and cash payment schedule, and you know the cash budget and the direct material purchases budget, pretty much you should be in good shape for this final exam as far as chapter 21 goes. I can't, right now, I don't know how many problems are going to come from chapter 21. I know at least half, maybe 25 out of the 40 are coming from chapter 21. There'll be a lot, and it'll be pretty computational too. I would think 7 to 10 questions will be conceptual, and the rest will be computational, such as computational ones like this cash receipt schedule. Okay, that should summarize chapter 21. I'll be back next week, and we'll look at chapter 22 and work a couple problems from chapter 22 and give you an idea, what you have to know from chapter 22. Thank you very much.